Well, we had a volatile end to the week with one of the largest options expiries in history in what they call a triple witching. Spooky, but really it's just stock options, stock index futures, and stock index options all expiring simultaneously. Add to that markets are still on edge with everything that's going on out there in the world, and that was evident today when the market sold off at the exact same time that a 5.2 magnitude earthquake struck Iran. In the crypto side of things, we're in the third week of a correction, and many altcoins have seen a breakdown from key support, which is quite shocking because so many of them were down in the dirt already. But not surprisingly, Bitcoin dominance and USDT dominance continued to climb. Oh, and the US passed $37 trillion in debt, and we didn't get rate cuts. Huzzah! So, is today's pullback a sign of a more significant correction to come, or are we close to the end of the shakeout? Well, historically, the last 2 weeks of June are some of the worst for equities outside of September, but the start of July is historically quite positive. Now, that seasonality doesn't quite hold true for crypto, which has me thinking that digital assets could be leading the equities market by a couple of weeks, much like they did in 2021. So today we're going to look at the key charts for stocks, commodities, and crypto with a key focus on time analysis to determine just where this could go over the next couple of weeks. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist After Dark. My name's Tom. Oh, wait, no, sorry. It's just after 11 p.m. I'm recording late, but I hope you guys all had a great abridged holiday week. Before we dive in, if you do find value in the content, if you could like, comment, or subscribe below, it really does mean a lot to me personally and helps get this out there to more people. And if you do comment below, maybe you can tell me what you think of this idea. I'm thinking of switching up the format of the show ever so slightly. So right now, Mondays and Fridays, I cover all the charts in extreme detail for the TA, but the weekly candle close tells us so much, and we get the weekly candle close for equities on Friday, and the weekly candle close for crypto on Sunday. So I'm thinking on Monday, I'll do a little deeper dive on the crypto TA, and on Friday, I'll do a little deeper dive on the equity TA. I'll still cover the high-level important ideas for both in each episode, but I'll just do that deeper dive after we get the weekly candle close for each, so let me know what you think of that idea below. So today we saw that increased volatility because of the triple witching event, which occurs 4 times a year, and in 2025, it's on the third Friday of March 21st, June 20th today, September 19th, and December 19th. So September 19th and December 19th, mark that up on your calendars with a reminder so you can anticipate it ahead of time for the next events. In the intro, I said today's was the biggest ever, but that's been the case for most of these because the market is perpetually expanding. So September, again, will most likely be the largest options expiry in history. Also, today's expiry came after a holiday, and that usually increases volatility even more, and we could see continued volatility on Monday because funds will now have to reposition. Looking to the S&P 500, it unfortunately closed the week below a previous swing top, and the broader indices and many individual charts seem to be in the early stages of rolling over into a correction, with 5,800 being the key technical near-term target for the S&P 500. Now, this aligns with that historical stat that I mentioned in the intro of equities tending to underperform the last 2 weeks of June before bouncing back in early July. So we're going to just have to see how this plays out. Now, we've been talking a lot about time analysis as it corresponds to this correction on Bitcoin, and today I want to expand that time analysis to the broader markets because I think a lot of what we're seeing play out in Bitcoin carries over directly to that historical data that we just talked about for the S&P 500, and they all seem to be somewhat interconnected, and we just have to see how this plays out, but the theory is quite interesting. In addition to that, I have a lot of new charts to share with you for some potential new swing trade setups, and I'm also going to cover a couple key mistakes I made this week in my trades. I know it's easy to talk about the wins and, oh, this great entry and exit and how much we made, but I think it's also valuable to talk about the mistakes because I make many of them in my trading each week. I'm trying to make less mistakes over time, but I'm sure you do too. And hopefully this can be a learning experience for you to see what I did wrong and what I'm doing to correct to improve that in the future. Now, lastly, I have a handful of requests for charts that came in on Monday's video. Thank you guys for putting those requests down below. You know, if they get to be too many, I won't be able to cover them all, but there were like 3 or 4. And what I'm going to do, I haven't looked at any of these charts yet. I'm just going to pull them up live and analyze them at a first glance so you can see when I'm looking at a chart for the first time what I'm doing first to determine support and resistance, strength and weakness, and is this a name I would consider for a trade, or is it a name I would consider if it came to key levels that I would then get into a trade. So let's get into the content and connect all these dots for the chart and time and cycle analysis as we interpret the charts. Okay, starting here on the S&P 500, and you can see we've had this underside support since the correction in April, and this week we bounced off it, and then we broke through, and we closed our week underneath that support line. Now, that doesn't mean we're going to have an extreme correction right away, but it just tells you that this general clip of the momentum of the move up, steam is coming out of that, and we're most likely going to chop around sideways or correct a little bit, and that's already been evident in how the price action is starting to roll over. And you can see we have two distinct moves in terms of how fast this was moving up, and then we had a little corrective swing, and then the clip at which we've been moving up here is definitely slower. And the main sign or early sign of weakness is that we had a lower high here, and then our first lower low in this swing here today on Friday. And in this last run up from this correction, you can see we had a higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low. That's your first indication of a change in character for a particular move. And if we look down below for where we could find support, the first logical technical target is right in this 5,800 zone, where you've got a lot of key moving averages and historical support, and also this last swing bottom sitting right there. The one subtle sign of strength, if you can call it that, is that we didn't close below this previous swing top, but I imagine that might happen next week. So we closed pretty much right at the top of that swing top. If it would have closed below, it would have been a little weaker sign for the end of the week, but still, this to me isn't looking like a strong trend, and I would suggest that that alternate path we talked about with bouncing away from this line and mounting a bit more steam to then consolidate up here is most likely not going to happen. And I imagine we now chop around and consolidate in this lower range, find support, and then bounce away in a couple weeks' time. And for that, I also want to go into our time analysis. So let me make this full screen here. And as we've been talking about, if you missed it, the market likes to move in cycles of 30, 60, 90-day cycles. And those midpoints can also be important. So the 15-day mark or 2 weeks, the 45-day mark, the 75-day mark, all of those can be important in time analysis. But the major marks are the 30, 60, 90, 120, so on and so forth. So if we measure this correction, and just a quick aside to Bitcoin, we had 2 weeks exactly from the top of the recent move to the bottom of this current consolidation. We have to see where it'll play out. But on Bitcoin, that 2 weeks or 15 days played out perfectly. So if we measure out from our April 7th bottom to the top of the move here, that's exactly 45 bars or 45 trading days. Now, this is a little bit longer in calendar time because the stock market's only open 5 days a week or closed on holidays, so not even full 5 days a week with those counted, whereas Bitcoin is moving 24/7. But if we take this out to the next logical target, which is 60 bars, that would put us exactly at July 3rd, which I think is really interesting, both from this kind of cycle analysis being a key date, and also looking at that historical data that we talked about in the intro of the last 2 weeks of June being a bit weaker, and then the first 2 weeks of July being a bit stronger. And I'm considering July 2nd and 3rd the last week of June because the 30th of June is a Monday. So that's still the last bit of June for me. And then July really kicks off after that July 4th holiday, which also makes sense because trading kind of slows down moving into the July 4th holiday. So we're starting to see some slight cracks and weakness appear. You can see on the daily, our RSI has already been in a downtrend. It's by no means way overheated, but it's been in a downtrend for the last couple of weeks as price action has still been moving up. Our mean reversion is pretty high, so there's room to cool off, but I'm still not overly concerned for these markets that we would see a major correction. I still believe the thesis that this year is going to be strong and dips are going to be for buying. So look out for that 5,800 for potential support, and we could chop away from there. Or if something really bad happens in the Middle East, I would be looking to say that 5680 level right here for this gap fill that we still have on the charts as a potential support a little further down below. If we go over to the NASDAQ, it is a very similar chart, that same 45-day analysis from the recent top to the high there plays out exactly the same. So timing-wise, this is all very similar. The only thing that I will say is from that last major swing top, because we had this big gap up here on the NASDAQ by the semiconductors pushing through, we are still far away from that last major swing at 20,260, which aligns with these two previous tops. So as we've been saying this whole run, the NASDAQ is a bit stronger, but if we zoom in, you can see the NASDAQ had that similar pattern of a lower high, and on the daily, we need to see where this swing is going to anchor to, but on the 4-hour, we definitely had that lower low. So let's see what the NASDAQ does on Monday. Okay, I am going to skip oil and skip the US dollar because they have been chopping around and are fairly flat for the week. And I'm just going to go over to SMH, to the semiconductors, and let's go to the daily because some cracks are starting to appear here. And as we've been saying, the broader indices, to get to new all-time highs, they're going to need semiconductors to lead the way. And we got some news over the last couple of days that there are actually going to be some restrictions on what foreign countries the semiconductor manufacturers can sell to. So you can see we had a pretty bad candle to start the day today, and we reclaimed just about 50% of it. We are definitely overheated, and we just got a sell signal on the Confluence model. That's something along with the RSI looking like it's turning over. These mean reversion dots, I'm just looking for a bit of cooling off in this sector as well. And if the charts can reset a little bit and maybe some better news can come in or a reversal, this space could really push us through. But I'm not anticipating all-time highs in the next couple of weeks. Like with the NASDAQ and the S&P 500, I'm expecting some consolidation or maybe a bit of downward drift before we can continue higher in the semiconductor space. And if we just look at an individual name like TSM, for instance, NVIDIA actually held up better than most of the names in the semiconductor space. You can see on TSM here, we have a trend line that if you go to the 4-hour, these trend lines on the daily, I don't like as much because you don't see the overnight action. So I'm normally drawing these trend lines off of the 4-hour. So we see all the overnight action and you can see how it respects it much more. But you can see that we broke down from that trend line today. Maybe we back test it now for resistance. And on TSM and a lot of the other semiconductor names, this chart is very similar. The other things you'll notice if we're just looking at the Invest Answers indicators here on the Confluence model, we did break into the center cloud, which we could bounce away from again, but generally we've lost the steam in this uptrend and the cloud is starting to travel a bit more horizontally. So what I would anticipate is if our cloud is turning like this for a bit, that we would most likely correct in here. Hopefully we find support from that center cloud, which aligns roughly with where the 200-day moving average is coming in. I mean, we could dip below it a little bit, but I would anticipate this sector gathering some more steam before another leg up. And when you're using this double cloud, and just as a quick aside, anytime you're in this upper third in an uptrend, it's generally stronger and it retests the center cloud a couple times before breaking through and losing steam. And when you're in a downtrend, the inverse is true. You break into that lower cloud and you generally retest that center cloud a couple times before breaking through. This I would consider an anomaly because of the April 7th tariff stuff. But if we go back in history, you can see uptrend, downtrend, couple times breaks through, neutral in the center. So just a way to read that double cloud setup if you haven't really been familiar with how to use that, but you can just see a lot of these patterns repeat time and time again, and it just gives you a little visual indicator that you can use to anticipate what kind of price action might be incoming. Okay, briefly, gold and silver both cooled off to end the week, but they're still in their consolidation ranges, so there is not too much to say on these right now, but let's move on to Bitcoin. I said on Monday that we had an unfortunate weekly candle close below the 50% here of our consolidation range. Now, this candle that has been forming this week is a lot weaker, but we need to see where it closes. The one saving grace for these couple candles here was that they did close above this 104,300, which are these previous weekly candle close highs from early December. So great sign of strength still, even though I'd obviously love to be above the 50%, closing above there. So what this weekly candle does for us is going to be important. And I could see in this correction one last flush down. And we know we have support at that psychological 100,000 number, which is right below where we wick down here. At 98,000 is our next support. And then we have key support, which is the 50% of the overall range at 93,200, 93,300. And there was a little bit on the 1 hour, like a head and shoulders pattern, which now I would consider invalidated because too much time has passed that was targeting this. But I could still see us in this consolidation. Often the market makers will have one final flush low, particularly in crypto, because they like to hunt that liquidity and shake people out of the market before they drive the price action back up. So in the next couple of days or next week, if there is, say, a big event in the Middle East or something that's happening, crypto has been leading the rest of the market, and maybe there's that final flush out of weakness. I'd love to see us just hit that 98,000 and then bounce away from there. Maybe we even bounce away at the 100,000. But right now, just being in the lower half of this range, particularly if we close below this 104,500, is putting us in a weaker position and opens us up for potential further correction. Now, if we go into the daily, just to apply our same time analysis here that we did to the S&P 500, from the all-time high here to the bottom, that was exactly 14 bars or 2 weeks. And we were saying because this was a 6-week run up or 6-week and change run up, that at least a 2-week correction would be probable. And now we've continued to consolidate from there. So our next target for a potential turning point, and that turning point could just be a higher swing low, or it could be a lower low in the correction, would be that 30-day mark. So we're coming right up to that. Today, actually, which is the 21st. And this also corresponds with that Gann seasonal date I mentioned of June 23rd, summer solstice. So over the next couple of days, I'm looking out for something that could mark that potential correction. And one thing I'm looking out for is actually that it would be nice to see a quick wick down and up. I know we don't like to see lower prices, but a big volume candle like that mixed with big liquidations generally leads to a turning point in the market. And what we saw today wasn't quite enough. We only saw about $500 million in liquidations, and generally $1 billion or more in liquidations leads to a solid turnaround point. And I would love to see a big volume candle down here too to mark a solid turnaround. And we just haven't had that yet. We've actually had volume dropping off, which is a sign of a rally just becoming a bit exhausted, which we've obviously seen in the sideways price action. And just one last thing on the seasonal dates. So we have Monday the 23rd there as summer solstice. The other 4 Gann seasonal dates throughout the year are fall equinox, winter solstice, and then the spring equinox. And often these points can mark a rough turnaround point in the market. It depends on the asset, but if you go and backtest it, you will see that often, not a 100% hit rate, but I would say, let's say 3 out of 5 times, maybe a little bit higher depending on the asset, that you will see a turning point around these seasonal dates. And just like the in-between levels of the 30, 60, 90-day cycles work as dates, in-between dates on these seasonal dates tend to play a role as well in turnarounds in markets. Now, the last thing I will say is that when we were looking at the S&P 500, the S&P 500 has still been drifting up and made its high right around here, whereas crypto has already been correcting for about 2 weeks before the S&P 500 made its high. And so this is what I was saying. I'm wondering if crypto is leading the broader market by a couple of weeks. And if we do find that bottom here and continue to bounce away, that would align with that same time analysis of crypto starting to recover a couple of weeks before that July 3rd date, or maybe the week of July 7th, if that's really, the week where equities start bouncing back. Okay, if we go to Solana on the daily, it is definitely looking weaker. Our daily RSI is almost reset. We are printing mean reversion dots, so I think we are closer to the end of the correction than we are to the beginning of the correction. But the things that are a bit concerning on the chart is that we broke down from our 50% level here at 141.30, and you can see how we had multiple tests of that as support. 2, 3, we didn't break down the fourth one, but we broke down on the fifth one, and our daily candle here actually closed below the 50% level. So even though we had a good bounce away, and this bounce was off these previous peaks right here, so it did find support, it now bounced away. It couldn't close a daily candle above that. And at least where we stand right now, a few hours into the day, it looks like we are rejecting from the 50% level. So if I just go into, I don't know, something like the 30-minute, you can see we've had 1, 2 retests, and now we're going in for a third. I guess one thing you could say is that maybe this is like, a bit of an ascending triangle with the resistance line here. And these kinds of patterns have a higher probability of breaking up, because what you're seeing similar sell pressure at that same point, but the buyers are stepping in at higher and higher prices to support the price action. So not as reliable on a small time frame like this as it is on a larger time frame, but that is a small near-term sign of strength. And you can just keep your eye on this to see which direction it breaks. Now, we've been talking about this double top pattern here, and the target from this was coming all the way down to $133, roughly right around there. So this morning, as we were coming into this, I was saying on X, watch out for a potential breakdown. And I anticipate support between 133 because of that target all the way up to 136. And we got that first support at 136. You can see that's where this volume cluster kicks in right here. And we have these previous peaks. So maybe we don't get all the way there, but I'm really watching this 50% level. And if we reject away from it, I could see us dipping down for one more lower low here. And that 133 is really where this volume cluster kicks in. And I would anticipate more support there to maybe all the way down to the 382 at 130 and change. But hopefully we can find support there and then muster strength to break back through to the stronger half of the range. Okay, if we go to Ethereum, just on mean reversion on the daily, the RSI and mean reversion are resetting. Mean reversion is in the neutral end of the range. RSI still has a little bit to go if we look at the 4-hour in contrast. 4-hour has almost completely reset, but I would love to see, and the 4-hour RSI for a meaningful turnaround usually does have to tag the bottom of the range. So that's why my thesis on Solana and on other cryptos is still that we probably are going to see one more dip before a meaningful move back up. But let's just go back to the daily for Ethereum. We rejected from the 50% of the range, and we're back in our consolidation, and now we're testing this bottom support at the 382 fib level. We did bounce away from that today, but the nice thing on ETH right now is that you have a very clear line in the sand that if we break below these levels, we're most likely going to flush down to test lower prices. And the unfortunate thing here in the VRVP, we don't really have major support until 1900 or 1800 here as the major levels, but then you have a little bit of intermediate support at $2,000 and let's say 2180 to 2200. So mark those up on your charts. Got that, let's say 2200, you've got that 2000, and then down below 1900 and 1800, almost working in exact $100 increments down here. So easy to remember, but I imagine Ethereum will move in concert with the rest of the crypto space. And just note to yourself when you're comparing this to other crypto assets, even if you've been an Ethereum holder for a long time and you love it, it's below its 50%. And it can't get above it. Now, Solana just broke below that too, so it's an equally weak position. But when you're looking at charts and just analyzing strength and weakness, there are a lot of crypto names out there, and you want to look for charts with strength that are in the upper half of this range, ideally. Okay, pulling up a new one because it was requested, which is SAY, US dollar. And you can see that compared to a lot of the rest of the crypto space, even though it sold off a lot from this high today, that SAY did not break down from key support like other charts. And there's been a lot of volume coming into this, and I wonder if this is really just the Invest Answers community. I don't know how many people we are across the globe, but that would be quite something if this volume spike is just coming from that buying. And then, of course, other people pile on top of that because they see the volume increase. But if I'm looking at SAY and we just zoom out a bit more to, I don't know, let's go to the weekly. And I just want to look at signs of strength and weakness. And, overall, it's not the strongest chart. We did reject from close to the 200-day moving average there, but the volume that came in this week definitely competes with a lot of these big volume candles, and it outpaces anything in recent history. And we know that volume candles like this can often lead to a turnaround, and since we're coming off a low, maybe this is kicking off some more momentum to the upside. Outside of that, the only thing I could really say on the chart is, we can kind of draw, a bit of a falling wedge pattern here. And for a falling wedge to be valid, I like to see at least 5 touch points. So we have 1, 2, 3, 4 right now. So I would love to see at least one more to validate this. But if this is a falling wedge, generally falling wedges break to the upside. And if we take a quick measured move, again, this is very rough TA. But again, this is very rough TA, but I'm just trying to find some signs of strength, in a chart that has been beat up and say, we break out here, because you have to draw this target wherever you eventually break out. Oh, that would target $1.23, and right now we are at 21 cents. So, there could be upside in it, and that would be a new all-time high. But the crypto market and the alt space in particular needs to rally for this to make a meaningful move. And we have some work to do to get through this volume cluster up to about 27 cents and change. And then we have a bit of a gap where we could move pretty quickly up to 35 cents from there. And anytime you see these gaps in volume, like say from here, from 45 cents to 67 cents, or well, I guess I would say 60 cents, but 45 to 60 cents, you can usually have an easier time moving through those low volume gaps. So wish I had more to say on SAY, but we need to see how the price action plays out over the next couple weeks. But, we definitely had a higher high and looks like we're setting a higher low here. So this is indicative of a bottoming pattern. And, you could even argue that we are seeing a bit of an inverse head and shoulders. Let's just draw that out here. So that would give you left shoulder, head, right shoulder potentially forming. And wherever that breaks out from, you are just taking the center here and you're mapping that out to the breakout, wherever that ends up happening, which actually kind of makes a lot of sense because it's targeting 42 cents, which is right at this triangle, which would make a lot of sense that price action would move up and then reject from that probably, and then try to attack it and break out one more time because nothing moves up in a straight line. So one to keep your eyes on, but nothing too definitive to say yet, and it still has some work to do. Okay, moving on to Fartcoin, and I'm just going to petition that we start calling this FC so it can be a little bit more respectable and I don't have to feel like a degen for perp trading this, but let me know if you're on board with calling this FC instead. I'm gonna just try here. So we're looking at FC on the daily, and I'm gonna turn off the confluence model here just so we can see our fib levels a little bit better. And if we take this last move from the correction bottom in April to the top, you can see that we're sitting right on top of our 50% level, and we've wicked below it twice. But unlike Solana, we were able to close our daily candle above it. So just comparing charts like this is showing you slight signs of strength. And I also have this line drawn because this one also, as well as the regular TA, just respects the time analysis really well. So if we go from our all-time high to that date, that's 30 bars there on the 22nd of June. So that corresponds, with our seasonal turning date. So I'm just watching that for a potential turnaround. But I imagine with this, because there's still some weakness in the chart too, we could see a flush down maybe to the 75 cent range and then bounce away from there. I'm just treading a bit carefully right now. And if we don't see that and we correct sooner, that's great. But I just want to play it safe at the moment because there have been a lot of violent moves. But this is the one I wanted to go in to the 5-minute chart because, I'm perp trading this on small time frames. And I just want to highlight 2 things that I got wrong over the last couple days. So I've had this downtrending resistance drawn and we've been rejecting from it the whole way down. And yesterday's correction on the Juneteenth holiday, I bought this low here and I was in the trade And I was just letting it ride for a bit to see where it could go because I knew we were approaching this line again and I wanted to see if we could break through. And towards the end of the day, there it was. Yeah, I was going to bed at around 11 p.m. and I moved my stop up from my entry to right below here, and I set it too tight, and I moved it up here because we were bottoming on the RSI on a lot of the time frames, and I thought, okay, we're going to move away and we're going to attack this. But a lot of times before a key support or resistance level breaks, or before you break out, there will be a flush of the lows or a flush of the highs. So that means that these have been the lows in the recent range, and the market makers know where your stop orders are, and they'll just flush those for the tight stops to get people out of positions so they don't benefit from this price action up. So I woke up in the morning and I saw that we were up here, and I thought, great, the move played out. I'm going to close out my position in a profit. And then I realized my position already closed, had a little profit from the bottom, but not as much as it could have been. Now, mistake 2 that I made. As we were breaking down, often you will retest resistance for support from the upside. And as we were coming down, right here, all the key time frames that I watch were bottoming out and we were getting buy signals. And I thought, surely this must be support. I bought in. It was early in the morning. I hadn't made my coffee yet. And instead of setting my stop, I just put in my buy order and I walked away to make coffee. And we had this violent breakdown. And then I was left stuck in the trade. So this is just a reminder, no matter how confident you are in the TA, always when you put a buy order in, set a stop loss just below a key invalidation like that, because it would have been much better to get stopped out with a small loss rather than get stuck in this whole move down. And then I ended up playing this next zone for support that broke down on me too. And then I stopped out of my position and, I had a couple $1,000 loss on this one and then got back in down here at the bottom finally. But painful lesson, painful mistake to make. My general approach to perp trading is that when I have a clear level and I get in outside of this morning, I always set my stop loss just below, with a little bit of tolerance. And I'm okay getting stopped out. I take sometimes 3 or 4 losses on a trade that are, $40, $60, $75 or something like that. And then I make it up on those bigger moves. And that's just the cost of doing business. That's my insurance to not get me stuck in a trade. And this was an expensive lesson to relearn today as the market had that violent drop. Okay, MicroStrategy and Tesla have just been chopping around sideways most of the week outside of, a few spikes and undulations, but you can see that play out here on the pair trade chart. So the TA has not changed much from Monday. If you want some recent TA on MicroStrategy and Tesla individually, check out Monday's video. But right now on the pair trade, you can see that sideways chop and how the price action is moving somewhat sideways. But this is still for me in the favor of Tesla. I'm holding my Tesla and I'm waiting for the chart to give me a signal one way or the other. Generally, we were saying on Monday that when you break into this lower cloud, the price action usually continues in that direction for a bit, just like when you break into the upper cloud, that price action continues for a bit. But right now, this is slightly neutral, and we're just right below it, but I'm still putting the favor slightly in the odds of Tesla continuing to outperform over the next couple of weeks, which would also align with that seasonal date shift, and maybe MicroStrategy catches a bid around that early July timeframe. All right, moving on to Hood, and I've still got our price targets up here from the profit-taking model, but I'll just turn it off right now just to clean up our chart a little bit and take off some of these lines. But, Hood is still overheated, but it caught a bid today. They had news about a new mortgage lending service coming out. They've got their banking coming later this year. So Hood is still performing, but I'm watching that price target around the 83 to 85 as we've been talking about. It is respecting this little bit of a trend line right now, and I'm just hoping that that target hits within the next couple of weeks. If we chop around and consolidate too much more, I might lighten my position a little bit because I'm in there from the high $30 range, and it's been a decent run. And again, just to recap, I'm holding on to some of Hood long term. But if we go over to one we haven't looked at much recently, which is Coin, this one had been weaker than Hood in comparison, and it hasn't gotten past its all-time highs, but it's definitely caught in a bid lately, and it might still have some more room to run. Now, I got out of this in November into December because Hood was definitely outperforming and making higher highs where this was making lower highs, so the weakness was evident earlier on, and I rotated from Coin to Hood, or just all of my Coin position into Hood. But now with the Genius Act passing this week and stablecoin legislation being in place and them having their base stablecoin, it's really started to outperform. We are into these previous peaks, so anticipate a bit of resistance here. But if we're drawing out some rough price targets from this move up into the consolidation, and we just project this out like that, that puts us to a target of about $370. So I'd say $360 to $370 just to be a bit conservative with it for a near-term target. If we go out to the weekly, interestingly, that also corresponds with the outer end of the Confluence Model Cloud. But the reason I wanted to go to the weekly is just to draw a longer-term price target. If we go from this swing right here to the all-time high, I'm taking out the bear market here because we had this consolidation before really starting the move up, so that's why I'm picking this point. And then I'm projecting it to the lows here in April, and that would put a target of around $440 here in late 2026, September 2026. So again, these aren't an exact science, but if this move is any indication of the early stage of a bull run and we are going to break all-time highs, which is kind of your trigger, then you would anticipate hitting this price target a bit more quickly than this last time extension. Now, one more that caught a bid on the Genius Act passing this week, and that is Circle. And they have just been on an absolute tear. Sorry, this is the weekly. Let's go to the daily. And we are up. It doesn't even have that $31 IPO price, but assuming you got that $31 IPO price to the top, that's almost a 700% gain right now in the last couple of weeks. Now, what I will say with this, once the hype train stops, this will most likely, like it's had a violent move up, will also have a violent move in the other direction. The first real volume cluster from this little bit of trading is at that $161. So I would not chase this right now. This is definitely a sign of retail chasing the hype, and we're starting to get, just like we've talked about in the past with blow-off tops, gap up, seeing multiple gaps up. If we see one more gap up on Monday, I would most likely sell a fair bit of my position just to try to catch this on the retrace back down. But again, with this short-term kind of price action, it's really hard to tell. You could try drawing some trend lines like this and just saying, hey, here's the general pace of the move up. And if we start breaking one of these trend lines, that's a sign to me that some momentum is coming out of it. But I anticipate these being really hard to catch because we could just drop like a rock in one candle and break right through these. So be careful. Don't chase Circle right now. I would give it some time to see where it settles. Okay, not going to spend a whole lot of time on Celsius, but I'm just looking at it on the weekly where we still have room to run on the weekly RSI. Once we get overheated like this again, I'm starting to pay attention and I'll be looking for an exit. But we had our highest weekly close in this correction, and it's just continuing to grind up towards our price target there of that $60. All right, just covering one of the Bitcoin treasury plays, which is ASST. And I had a stop order that stopped me out today on this drop. And then we closed back in the range, just barely holding on to this volume cluster. And I have this support line drawn here at $5.02. So it was a bit of a fake out, potentially a liquidity flush before moving back up. But if this does continue to break down, watch out down below because our next major support really isn't till like that $3.44 or that $2.55. My initial entry was at $2.75 for the first buy. So tread carefully with this one right now. These can move violently and they could perhaps announce a buy in the coming weeks of what they're actually going to be adding to their treasury, and that could send this to the upside. But right now it's at a place where I got stopped out and I'm treading carefully. The other thing now I have to consider, because I stopped out and I had a little bit of a loss on this trade. It's not a big loss, but anytime that happens, you have to pay attention to the tax wash rule. And if you buy back into an asset within 30 days, then you can't write off that loss anymore on your taxes. So since this is a small one, maybe I'm not worried about it. But if you're ever harvesting a bigger tax loss, make sure you don't buy back into that asset within the 30 days to avoid the wash rule. All right, I wasn't going to cover this one, but because a lot of folks are in DFDV, I figured I would just mention it. We did have a big breakdown today, but we did find support at that $23.50, which is the most traded level there. We broke down from this uptrend as well. So I'm definitely watching this one. If we break down from the support and close below, I might lighten my position a little bit because there could be more downside. I would have loved to see us holding above the 50%, but we need a few more days to see how this is going to develop next week. Okay, one I haven't mentioned before, but I had a small position for a while, and that's OKLO, and they make fission reactors. And this stock has been on a tear. But the price action this week, we had 3 down days. We broke these previous swing tops and these swing bottoms here. We're getting a sell signal on the Confluence model, and our RSI is turning over. The mean reversion has been overheated. So I sold out of most of my position today because I didn't like that we were closing below these previous tops here, mixed with the sell signal. Just gave me a sign that this might be cooling off for a bit and coming back down to earth. I still like this company long term, but I'm watching just to see where it might settle and find support. If we just draw some quick fib retracements from the top down to here, look at that. I love when things align. So this bounce on this swing right here came in right at the 50% at $45. To show us a bit more strength, it would be great if this bounced at like the $52 at the 618 level here, but I'll take anything down to that level. So let's just watch this over the next couple weeks to see if a correction does play out for this. And it would be healthy for it to consolidate for a bit and cool off. Maybe we can get the 4-hour RSI to reset, because we don't want assets to move up in a straight line. That's just going to lead to a blow off top and unsustainable price action. So, maybe we bounce off this level and then eventually continue higher. That would be great to see something like that, or even a bit of a deeper correction and then bouncing away like this. I would take any and all of the above, but resetting the charts is not a bad thing. On the flip side, just because we have to be ready for all sides of the market, if this does break down below the 50% and rejects, that is a warning sign that the steam is coming out of this and that the stock won't fare as well in the near term. Okay, new one here. This is UPXI, and they are a Solana treasury play, not a Bitcoin treasury play. And they had a massive move after announcing, going from $2.40 all the way up to $22. Sounds like CleanSpark all over again. But I was not aware of this, and I have to thank Newman, who I had a call with earlier this week, and he's like, what do you think about this asset? And I was like, I actually haven't heard of them. And the fundamentals of the company don't look great, but if their Solana treasury play works out, it could, catch a bid, particularly if the crypto market rebounds. And on our call, I actually got into a position here because we are a little bit below the 382, but you can see we were bouncing from support, all at that low $9 level. So I got in on this candle here, and then we shot up 10%. We were up almost 15%. And today had a massive drop. And lesson learned again, I set my stop just a little too tight, right at $9. And we wicked like pretty much exactly right to where I had my stop, and then bounced away after hours and closed at $9.70 back up here, which you don't see on the daily chart. So I guess I learned that lesson twice this week, to give yourself just a little bit more wiggle room on stops. But I'm going to watch this one next week, see if there's another good entry. I don't love losing that 70 cents in the trade, but I would get back into it, if it comes back down and finds support one more time. And the last thing I'll say is that these are very high risk, so manage this with an appropriate position size, not very much of your portfolio, and keep those stops tight so you don't lose too much on this if it turns against you. Okay, last two, and these were requests from someone in the comments. Sorry, I can't remember the username right now, but they are two UK-based Bitcoin treasury plays similar to MicroStrategy. And the first one is SWC, Smarter Web Company. So let me just turn off my Gann swing indicator so we can see these candles a bit more cleanly. And you can see that this has just gone up like crazy. Holy heck. In terms of the percentage from the bottoms here to the top, anyone want to guess? 19,000% in a month. That is insane. That is absolutely insane. But I can say definitively that I would not chase this at this point. I mean, you can just see how this has gone absolutely vertical. And like we were talking about with Circle, and even though there isn't much history on this chart, with the RSI being this overheated with this vertical move, anytime you see either gap ups, which we haven't really had massive gap ups, but when you see candles getting bigger, and then this is out of the norm, this is out of the norm, that's telling you that you're getting to a point in the price action that is not going to sustain and soon will turn the other direction, and it could be a violent turn the other direction. So you can keep your eyes on this one, but watch for potential entries, and just like we do with everything, let's draw some fib levels, and it makes sense that the 50% is right here because that's the middle of this price range. So at least where this stands right now, you could look for it to come back to the low $300 range. But if we have another day or two up, you're going to have to adjust this to wherever that eventual top comes in. But this is very much indicative of hype buying. So everybody who's watching this has seen that it's gone up thousands of percentage points. They're chasing it, but at this point, you're not going to make thousands of percentage points. Is it going to go from $600 to $1,200 and you're going to get 100% return? I don't know, but that's not as good as 19,000% from the bottom. Anyway, the point is, people are coming in, buying on hype and speculation, and as soon as there's one big sell, it can quickly cause cascading selling to really bring you back down to earth. So I would not get into this right now. Okay, the other name they requested, which is a similar play, is CINGF. And very similar chart as well. I wonder when they announce their treasury play. But if we just measure this from this swing bottom to the top, this one is at 1,000%. So a reasonable 1,000% compared to 19,000% on the other one. Oh my gosh. It's still so ridiculous. So this one is not as overextended comparatively, but again, these large candles and just the vertical nature of this and how the RSI is overextended on the daily, all of this is telling you, I mean, we're at 5 standard deviations on the daily on mean reversion. I don't think I've ever seen that on a chart before. Please don't chase these names. To whomever requested this, just have some patience and wait and see where the dust settles, because this isn't going to last forever. Again, if we're just measuring off of here for 50%, or if we're going off here, and let's stick with that one, 40 cents, I would still wait. Just let's see a couple swings down and see how these settle, and be patient and look for the opportunity to come to you. Don't chase something and lose a bunch of your portfolio. All right, so that's it for the charts. I hope that was helpful for you guys to see how I apply a bit of time analysis. Remember, with time analysis, there is a bit of variance there. You can give yourself some tolerance of a day or two on either end of a target, but it's, a roundabout number that you aim for. Also, I hope it was helpful to see how I analyze charts that I've never looked at before for the first time. I would say as we're moving into the next couple of weeks, we're seeing those early signs of weakness and a potential correction. Just be a little bit more careful and be patient and anticipate what might be coming in, because there may well be some good opportunities out there. We still have uncertainty in the Middle East, and we know that can bring volatility. So keep your head out the window, stay sharp, and I look forward to seeing you guys on Monday. Bye for now.